Good morning. It's Thursday, June 15th. You know what I got today? I got a talk with the charter lawyers in that lawsuit again. If you guys don't know, I've been dragged into this effing lawsuit, but I can always talk about it later. I'm not under a gag order. I'm not under anything. First thing I want to bring up, you guys have shown up in force. Thank you so much. Continue rating on Spotify. Continue rating on Apple Podcasts. Continue rating on whatever platform you do. If you do rate, just send me a little note or post it in the private Facebook group or send me something on Instagram or an email. All of that stuff is posted in the link tree down below. Hold on. I need a little water. But it's all posted there. I thank you guys for showing up. Hey, that's tip enough for me. Specifically, Lionbreed on Spotify. It was his first show, I think a couple of days ago. I'd like to know, first off, are you still listening? Second off, what was the rating that you gave me? Because he listened to his first show, but he promised to give me a rating after that. So if you're still listening, if I hear from him, it's good. If I don't, you know what? Maybe I'm not his cup of tea. Work for it and Vernon. Thank you. Hopefully you guys are still there. Thank you for the comments on the last show. I don't have a way of writing everybody back on Spotify. I appreciate your comments. I do look at them. I don't look at them as much as the other social platforms. So when you comment on Spotify, just know I will get back to you. It just might be that I don't get a notification when people comment. So, you know, it is what it is. I thank you guys for taking the time. If you asked me about a stock, I think a couple of people did. I will address it today. Yesterday, I had a Zoom video call with about 50 other people with Cathy Woods, the phenomenal ARK investor. If you didn't know, I got out of ARK with a loss, I think in December. I had originally invested in 2017. I did not dollar cost average down. I just kind of added a little bit, but not much. Wound up going from like a $300,000 gain down to like a $20,000 loss. Hey, my own fault. Didn't protect my capital. Didn't do it right. I kind of thought after I got out, and I got out at much higher levels. So if I buy back in, it is at the current levels. If I get back in, I can get back in at lower levels and probably make money. I swore I wasn't going to get back in. That woman is incredible. I mean, just phenomenal. She, charming. B, she knows her stuff. And what I'm going to do is maybe over the weekend, I'm going to put my notes, what I took from her. She had comments about Tesla, the 4 pillars of Tesla, and why you should invest in Tesla, and why she thinks it's a $2,000 stock. If you think that's crazy, when she posted in 2018, when they were about to go bankrupt, she posted research and posted an estimate of $4,000 per share. They are at $4,000 per share with the splits and things that they have done. It is not crazy. So when she says $2,000 a share, she has past performance as her example. So I don't go, but she brought up, Mercedes level 4. I mean, she just knew everything about everything. She also addressed the NVIDIA situation where they got out of NVIDIA, blah, 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 and how Bloomberg had posted a clickbait. So I'll post that in a newsletter with all of the notes that I took. I don't know that I can post the actual Zoom meeting. It was recorded, but I do think that it's for this private group that I'm in. It's a high net worth group. I think it's private there, so I probably will not post that. If I can, I will. I did record some things from a screen capture, so we'll see what I can do. Good morning, Brandon from Cancun. High five that picture on the private Facebook group. Phenomenal. But yeah, so news yesterday, the Fed paused. What I don't understand is they paused, but they said there's going to be another half-point rate hike, bringing it to 5.5 to 6.25%. They indicate the economy is strong, raised the GDP forecast. They see unemployment actually coming down So they see themselves as engineering a soft landing. The reason the market went down, because they said they're going to raise more. The market thought a pause meant ending. When Powell said he would raise more, you saw the market just dip down. It's unlikely that we're going to see a cut anytime soon. That is essentially what Powell said when he talked. That was what sent the markets kind of down. That's what sent the market a little forward, a little kind of flat. Wasn't crazy. I mean, it wasn't a crazy market. Yesterday's afternoon candle here on SPY, it's a 0.03% period. It's not crazy. You opened up at 437. You closed at 437. Wasn't nuts. So whatever Powell did, he didn't rattle the markets. When asked about the two set, why did you pause and why do you think you're going to raise at least twice more this year? Powell said speed matters. Speed was important when they went from 0.75 per meeting down to 0.5 and then down to 2.5. So he believes that moderating the pace is important. He also said he doesn't know the extent of the banking crisis. I didn't see a lot of reporting on this. He doesn't know if it's done. So that to me says, hey, we've still got some volatility in this market. The VIX right now, like I've told you guys, I think the VIX is broken. It's at 13.98. The Dow is up 0.29. Energy's kind of taking a bump here. The NASDAQ is taking a break at down 0.1%. I mean, we're still flat. If you look at SPY, we've still got confirmation. And there was a question yesterday, and I think it was privately to me, what's confirmation? So confirmation for me, and this is just me, again, develop your own profile, your own system, blah, blah, blah. But I use a 9-day EMA. And so whatever chart, I'm on a 4-hour chart right now. Confirmation for me is above this 9-day. I use this on a 5-minute chart. I use this on a 4-hour chart. I use this on a daily chart. I use this on a weekly chart. But that 9-day EMA for me identifies confirmation. It identifies confirmation of a trend. And you want to trade the trend. If I'm above that 9-day, essentially it means that I have confirmation. Strong confirmation is when that candlestick doesn't even touch the 9-day, when it's completely above. Take this candlestick right here, for instance. That one, see how it's touching that 9-day, that green button right there? Yeah, I'd be cautious on that. But the next candle is completely above that 9-day. I'm not cautious anymore. That next candle, completely above. Yesterday's afternoon candle touched the 9-day. But today, if we don't touch it, you're continuing the bull run. That's the way I look at things. Hopefully that explains confirmation. Maybe I'll put that in the PDF that I'll sell on GitHub at some point in time if I get lazy. I want to show you that this rally is not just tech, even though this one's tech, it's old tech. IBM. If you haven't noticed, and I brought up IBM on this one because I do chart the Dow. IBM at 123 on May 15th. Crazy. You're at 137. Great move. Under the 200-day, you're back over the 200-day. Still have confirmation. There's a bit of a button hook happening. If you're in IBM, kudos to you. Great dividend, great stock. AXP. AXP is down 2% today. It's taken that button hook right there. You got this gap down here at 151, but if you got in at 150 in the middle of May, you're at 170. Great move in this market. Again, great move. Caterpillar, CAT, I'm in this one. You saw this gap up here. This gap right here probably is going to get filled again. That 200 days starting to move forward. If you got in at 210, if you got in at 225, if you got in at 222, you're at 245 right now. Nice 10% move in a huge, well-managed stock. Good company, good management, good products, good profit, good stock. So it's not just just the techs ones that are moving. Sometimes there's quality stocks to be had out there that you can find in the Dow and things of that sort. For you guys asking about Tesla, I will go into Tesla. Estee Lauder. I bring this one up. They got an upgrade with a $250 price target. This one at 187 was the buy. You're at 195 right now. This is going to come back up here and fill this gap. I mean, that gap up to 240. Even if you get to 225, you're not even at the 200-day. So good company, good products, good management. If we look at EL, EL is the symbol. I do not wear makeup. I know nothing about Estee Lauder. I asked some friends. They liked Estee Lauder. Year to date, down 21%. They are making $1 billion in profits, 1.37% dividend. Pretty high PE. Forward PE, pretty high. But the average price target, 241. This is the 243 right here is the Behringer price target. So you can see June 5th, outperform to perform, buy to hold, May 12th, TD Cowen, March 14th. That $28 price target, that's something wacky. But again, they raised their target. I don't see any buys. I see all sales, but I do see sales around 200. So that may be what they're managing to. Ooh, I got to sneeze at some point. So if I sneeze, I apologize. But Estee Lauder up. TJX. This is TJ Maxx. Reiterated as a buy overweight by JP Morgan. $96 price target. It's trading 80. So you're seeing right now it's running a little bit. I would probably wait for this one to get back into the 70s to actually buy. You're only 24 cents away from that. PE is 24, dividend 1.66. You're kind of flat on the year to date 0.42. But it was reiterated as I think it was Oppenheimer that did that. It's not in here, but they reiterated it with a $96 price target. Your average price target is $87 and you're trading it just under 80 right now. Dollar General, JP Morgan, who I hate, by the way, put them on a focus list for this year. $187 price target. You're seeing this kind of just button hook right there, and you're seeing a gap between 179 and 201. I think you get back to this gap. The problem is, and I'll show you a long-term one. When we look at the PE is 15 and 14. It is expensive for a discount store. These guys don't have huge margins. I think it's very well managed, but I think their growth got ahead of them. Because if you look at this one from a weekly, and again, I'm just looking at it from a weekly, you've dipped under the 200-day for the first time since 2017. You've dipped under the 200-day, and you are far under the 200-day. But did it run too far, too fast? That's the question. Are you getting back up here to this 250? I think the 187 is probably a good price target. 200 is where your 200-day is. Now, your 50-day still moving negative. Your 9-day still moving negative. See this one, how it's below the 9-day, and I talked about confirmation. You don't have confirmation on the weekly. But if we run the 4-hour, you still have some confirmation there. See how that 9 days moving forward and this candle's just above it? The two previous candles they may be red, but they're above that 9-day confirmation. It doesn't always matter. The time matters, I should say. So Dollar General, that's one. BlackRock. I think BlackRock. We brought this up a couple of days ago. It had a secondary cross up here. 646, you're just getting them back above the 200-day. Your 50 days moving positive. You may have this golden cross here. And let's take a look. I mean, they're invested. You're breaking the 200-day. The only other time you really broke the 200-day was back here in COVID. And then here in October when you hit the October lows. So I think you get back up to the 750, 770 mark. You get your 10%. But BlackRock looks like it's going to break out. UNH, we talked about it yesterday, how they advised against cost. Any reaction in the market is an overreaction. I think you're moving back up here. You do not have confirmation, but in my mind, with a stock like this, you add to it. and I'm going to add to it probably at anything under 470. My average price right now is 485. I'm going to dollar cost average it. I like UNH. Nike had a nice move yesterday. NKE. This one has had a buy. See that button hook? 107. If you bought at 107, you got a nice, 2% move up here to 110. It went all the way down to, looks like about 104. I thought it was going to dip below 100, but you got that button hook. It's going to cover this gap up to 114. So if you want to buy it, there's a couple of gaps up here. It's going to get back to the 200-day. If we look at a long term of Nike, I mean, again, Nike, good company, good products, good management, good earnings. China is in trouble. Nike needs China. So it'd be a little bit of a stretch, but you're under the 200-day. Again, the only other time you dipped under the 200-day in recent history, you can see it back here in 2017 when we started. That was when something happened there, COVID. But you just dip back. Are we getting back up to 170? That might be a stretch. But I do think that they are a good company with good products and good earnings. Your boy doesn't use them. I'm a Puma guy. I'm a Under Armour guy. So, but NVIDIA. Let's talk about NVIDIA because 400 still is the price. Under 400, you buy it. Over 400, you kind of sell it. It's at 423. Do we get back under 400? I don't know. I don't know. I do know Cathy Woods had said the reason she got out. I'll just spoil one thing, and I mentioned this on the the YouTube live just before this. NVIDIA trades at 25 times sales. Tesla, just to give you an idea, everybody talks about Tesla's valuation. Tesla trades at 6 times sales. Twilio, which she brought up as a potential really good stock, trades at 2 times sales. I'll save that for the newsletter. But NVIDIA, I stick to it. Anything under 400 you add. At this point, I probably would not be adding. I would wait a little bit. Be a little bit patient. I think you'll get back towards that 400. If you are trading this, if you are not holding this, these are all-time highs. That's all I'm going to say. If you're not holding this one, these are all-time highs. I got a question about, hey, I'm up. I bought at this 275 level. Should I sell? Well, there's a lot of questions about that. Have you held it for a year? If you bought at 275, you haven't because that was April. Are you in a retirement account because there's no tax event at that point? Are you in a brokerage account? Because if you bought in April, you have to pay up to probably 25% in taxes. Why not hold on for a year? Because if it dips back down to this 275, you've got 400 in the bag with AI going the way that it is. So I do think that, NVIDIA, I'm holding on for the long one. Let's talk about year-to-date gainers. NVIDIA's one. It's up 190%. We know about that one. Meta is up 125%. This one, you've got confirmation. Do you buy it at 275? Well, I've said this before. There is a huge gap back here, and we've got to go back a ways to actually find it. Let's go to the daily. Daily will allow me to go back even further. And you've got this gap up here, and I've said it. It's going to retrace to that 315 level. So if you're buying it at 275, are you crazy? No. I mean, Meta is going to sell a ton of those headsets over the holidays because Apple's isn't available. Tesla is up 102%. It just had 13 days in a row. For all you Swifties out there, 13's our lucky number. Yesterday, we had a loss. If you look at the daily on Tesla, we had a loss. We wound up with a red candle. We closed lower than we did higher. 13 days in a row, we had a win. Tesla is up 102% in the year to date. You're probably coming back to cover this gap between 234 and 241. You're only down 1%. I mean, it was down in the 240s today. It's come back. I just think the market is too strong right now. All it wants to do is when it pulls back, it just goes back up. AMD is up 92%. you're kind of seeing this fluctuation and capitulation right here between the 130s and 120s. So 123, do I think you're crazy? No. I mean, I think you're fine. And then the one tech stock that is kind of sticks out, why in the world is Carnival Cruise up 90% year to date? 90% year to date. Carnival Cruise. I mean, they've got debt problems. You got their earnings coming up here on June 23rd. So that one, again, I don't know why Carnival Cruise is up, but, the cruises are packed. I will post in the newsletter a really good article about Oracle. It's entitled Oracle Hits Record After 50% Surge in 2023, Defying Tech Struggles. So this is, Oracle was not expected to be up this much. If you look back here in January, we started off at 81. Look at that. $40 gain on an $80 stock. That's 50% right there. So Target. People have been asking me, when can I buy Target? I think Target, it's got that button hook. It doesn't have a gap down here. The only gap here is filled for the most part between 152 and 153. I still think it's a $50 stock. At 135, they upped their dividend by 1 point something percent. Not a huge bump. They did address the issues yesterday at their investor meeting. So I'm going to add more, probably about 135. I'll be adding a little bit more. If it gets down to 132, maybe I'll add that one. That 130, 148, I missed it. Under 130, I missed it. I talked about confirmation earlier. I wanted confirmation. I got confirmation. We're above that 9-day. I wanted that. Doesn't mean that you'll automatically go up, but it does mean that I think you're good in this one. We talked, this 156, I thought it was a great buy here. It went all the way up to 162, and then it immediately shot down. So it doesn't always mean that you're going to make money. You've got to manage these positions. BABA. I said buy BABA when it dipped below 80. Let me see. Did the algorithm ever say buy? I think it was 84 on the algorithm. 83.59. You got down to $78, $77 here May 30th. I said it's just too cheap. You're going back to the 200-day. You're at $92 today. Bitcoin crashed. If you didn't see, Bitcoin crashed. Mara did not crash. Mara is down about 4% today at $9.25. It's a $10 stock. Buy more. Just buy more. It's a $10 stock. I'm telling you. It may get down to the 200-day at about 841. It's putting in this capitulation right here. 981 was the buy. GBTC, I was looking at GBTC. This one, I would absolutely say trade. If you're invested in Bitcoin and you own Bitcoin and like Coinbase and things like that, keep Bitcoin. Just keep adding to it. I do think Cathy Woods yesterday said, hey, Bitcoin is just something that you keep and they keep it. They just continue to buy it when it dips. And so GBTC is down 1% today. It's got no confirmation. I wouldn't invest in it. You're under that 200-day. At some point, you're getting back above that 200-day. So if you wanted to buy it today, you absolutely could. SoFi has been one that people have asked me about. It was downgraded based on valuation, and it's just because of the run-up. You're at $9. You're down 7% today. Is it time to buy? No, not yet, because you got this gap down here at about 5. I'd say you're probably using this right here at about $7.50. I'd say that is your support level, because if we pull this back to this high, your volume shelf right here about 792. That's where the first volume shelf really hits. You got no volume between here. So if this starts adding up, you'll create support. If not, it's between $7 and $7.80. So I think between $7 and $7.80. If you want SoFi, you add to it. I think it's an opportunity. Let's look at some people ask me about stuff. Lucas from Spotify asked me, what's your next pick to run up like Tesla? Dude, if I knew that, I mean, come on. I'd say Target's a good opportunity. I'd say Snowflake's a great opportunity. Roblox is under 40 again. Trade it when it's under 40. In TrendSpider, if you're new here and you don't listen, maybe you're listening on the radio. I show TrendSpider on YouTube. You can see TrendSpider. You can see right now, Roblox, you can see where it gets you in and gets you out on the algorithm. You can see my daily stock picks core portfolio. I say Devon Energy, under 50, add it. Over 50, you can absolutely sell it. Disney, under 100, you can add it. Over 100, you sell it. Costco, 500's the swing point. I don't know that we're getting back there. Cleveland Cliffs, I think it's a $20 stock on this one. Bank of America, I think it's a $30 stock. Amazon, I think you can add Amazon. I did a note yesterday. If you're subscribed to the newsletter, go to dailystockpick.substack.com and you can see my note on Amazon. It's a note. It wasn't, somebody had asked me about it on YouTube. So I decided, you know what? I'll just post it in a public forum, not the private Facebook group. I'll post it in a public forum, and it's a note at dailystockpick.substack.com. Here's the thing. 128 right now. Go back June 15th, 2020, when the pandemic had just kind of started. We had started in March, June. Things started to look forward and started to look good. That's where you're buying Amazon right now. Is Amazon a better company than they were in June 2020? Well, we're out of our houses now. If you've still got Prime, they're talking about a $10 phone service if you got Prime. That makes sense for a lot of people. So, Lucas, I don't know what my next pick would be. I've got a bunch of these, but I'm big on NVIDIA. I'm big on Meta. I'm big on Google. The AI train, like I have said for the last 2 weeks, the AI train is going all aboard. So I don't know what specifically. That's like asking Cathy Woods. And by the way, she was asked yesterday, what's your next pick other than Tesla? She named about 15 genomic stocks. So, you invest with your money. If I knew exactly what the next stock pick was, dude, I'd be way richer than I am today. Pat from Spotify, I'm sure this is for a questionnaire somewhere, but what did you mean when you say it drops 50%, you need 100% to get back? Pat, so here's what it is. Say a stock sells at $100. We'll just make the math as easy. Say it's $100, and you hold on, and it's trading at $50. Well, you've lost 50%. In order to get back to $100, you need $50. Well, at a $50 share price, to gain $50 is 100%. So whereas you lost 50% on the way down, you need 100% on the way up. That's why stop losses and managing your positions is so important, because getting back 100% isn't easy. Even in good stocks, with good companies, with good earnings and good management, if you lose 50%, getting back that 100% is not easy. Again, that's just kind of basic math, but $100 stock that goes down to 50, you need $50 to get back to 100, you need 100% gain. So, Keenan from Facebook wants me to look at HOFV. This is a Hall of Fame resort and entertainment. Looking at the future of the physical Hall of Fame village and their plans on expanding on their grounds, their resorts, shops, stadium, and course of Hall of Fame. My thought process is as the construction finishes, their attendance could be big. I could be wrong, but that's why I'd like to take a look at it. Here's the way I see it. I don't know much about the fundamentals of this one, but from a stock standpoint, if you got in at $6.81, fantastic. Love it. Great. From a long-term perspective, since March of 2021, you haven't made money. You were up here at $122. You're down at $8.25. For somebody who bought in at $122 to be down, think of that. We just went over losing 50%. You need 100% gain. This one, you've lost what, 95% of your initial investment? It doesn't have a 200-day, so it is new. If you bought it even up here at 231, I don't want to think about that one. I don't know much about what the Hall of Fame Resort and Entertainment is. They are losing $46 million. They only have a market cap of $48 million, so they're losing their entire company every year. They only have 5.51 shares outstanding. They have $4 per share. So 5 million times 4 is what, 200 million? So they only have a few years left before they have to dilute. I just, again, looking at those numbers, I don't know. The average target price is $20.75. I don't see any analysts covering this. Now, you can see May 18th, these guys are buying at $6.84, $6.94. It's not much money. It's like $51,000. What is this guy put in $100,000 of his own money? Ooh, kudos. Your market cap is $48 million and you're putting in $100,000. Big deal. I don't like this one. I think that, again, I think there's better places for your money. Does that mean that it's not going up to 16? You may know something that I don't. So, again, don't listen to a douche on the internet. If you think this is good, I just don't see anything that's good about this stock from an overview standpoint. But again, you may go deeper than I do. Drew from Facebook, anyone look into CVS seems to be trading undervalue from what I can see, looking to maybe jump. These guys, they're losing money alone on their receipts. Have you gone to CVS and the long receipt that comes out of this thing? I'm not a fan. I think they benefited from COVID because everybody was going into CVS to get COVID tests. Everybody was going there for medicines, blah, blah, blah. I think that's where you see that run up there. But pre-COVID, this was a $65 stock. Well, let's go back here. It was a $72 stock. No, where is it? Here. March. Yeah, $68, $70. So it's a $70 stock. It just pulled back to where it is. I mean, look at pre-COVID because a lot of this stuff was pulled forward. People thought, oh my God, they're making so much money. Oh my God, they're doing so many good things. From a weekly, you still don't have confirmation. From a 4-hour, let's look at a 4-hour on CVS. From a 4-hour standpoint, you just lost it. I mean, it just gapped down to 68 all the way from 71. Your volume shelf, if you pull this back to the highs, let's pull this back to about December 2022. And make no mistake, this is a lot of healthcare stocks. Healthcare just has not done well in this market. But you can see there's a volume shelf. People are holding around 86, but the vast majority are between 68 and 70. So I just don't think that this healthcare, to me, I think you invest in United Healthcare. CVS, I haven't even gone in there to buy like a candy bar in forever. So I don't use it. I'm probably not the best. I just, when you go over to FinViz, if you want to look at it, I mean, them and Walgreens, their PE is 21. Their forward PE is 7. They're making about $3 billion. Their market cap is $85 billion. They have a 3.6% dividend. Walgreens, WBA, they have no PE. They're losing money. Their forward PE is 6. They're down 14%. They're both in the same territory. I'm not hugely interested in either one. I just don't use them. But if you use CVS, if you go to CVS a lot, if you pay those prices for things in CVS, I just don't know. Joe put up 3 ETFs for EV-related stocks that are up over 20%. KRAS, IDRV, FDRV. If you want me to look at those, I will look at those, but they are going to be in the newsletter, so sign up for the newsletter. Colin from Facebook asked me, what do you think about Adobe earnings? Adobe earnings, I think, are today after the bell. Let's see. I think they are. Ironically, the algorithm just got you out. It's after the bell today. So what do I think about Adobe? Have you seen their autofill AI? I mean, it's awesome. Awesome. I don't know that that's necessarily driving a lot of new subscriptions. And if it is, you went from 344 on May 16th up to 479. You got gaps all the way up here. I think it's a bit extended for me to risk money in the long term. I just think it's a bit extended. Now, when I say extended, you're at 479. Back here in November 2021, this was a $675 stock. So if you go to FinViz and we look at Adobe, let's see. They're making money. Their PE is 47, forward PE of 27. This is a subscription company, so it is compounding. Software as a service, 80% margins probably. They don't have a dividend. They're up 41% this year. They are 3% from their 52-week high of 491. I think it's possible you get back above that with a good earnings number. The average target price is 435. I repeat, 435. Now, Wells Fargo was the most recent. They moved them from 420 to 525. So you've still got, 10% from 475 to 525 if they're right. Yeah, I think there's a lot of hype around this one. There's no real sales. You got $2 million here at about 364. That's nothing. I mean, these guys are each selling. They're putting pools in the backyard. That's all they're doing. So the last buys that you see are in September at 280. Those guys are happy. Those guys are super happy. In fact, those are the guys that just sold. So there may be a couple of things in here. Read the articles. For me, it's a little bit stretched. You're above that 200-day on the weekly. Below that 200-day, I'd probably say you got all the room in the world to run. But the RSI, even on the weekly, is 70. If we go back to the 4-hour and we look at some of the indicators like the RSI and the MACD, look at that MACD. It's up at 20 on that oscillator. 20 this oscillator starts at 0. Going to 20, holy crap, that's stretched. Your RSI is at 78. So if you own it, I'd hold it. If you don't own this, I don't know that I'd get in. I'd probably wait for the earnings to come out. And maybe you're at 525 after the earnings because maybe they mention AI 65 times on their earnings call. You know they're going to do that. So, but I liked it much better way down low. It's probably similar to NVIDIA, but I just don't think that the analysts on that one, because it's a subscription, it's not a hardware company. I don't think they're going to miss that one. Thoughts on EIG from Aiden. This is Employers Holding. I know nothing about this company. You got that button hook right there, 36. You got this gap up here between 41. Are they a good company? EIG. Employers Holding. It's a $1 billion market cap, so it's super tiny. 2.96% dividend. They're down 12%. Their average target price is 50. They're trading at 37, so they're right in the middle of their 52-week range, 31 to 46. Their PE is 14. The last coverage was from Janney with initiated coverage with a $50 price target. I don't know. Doesn't excite me. I mean, June 1st, this guy bought $250,000 worth. He bought $491,000 at 37. I think that's where they're managing the price to, around 36, 37. So it doesn't super excite me. But if you know something about the company, I'd be worried about this button hook right here, and it doesn't have confirmation. The algorithm's going to get you out. The algorithm loses you, just so you're aware, too. You're better off buying and holding this one. You lose 9% buying and holding, which isn't great, but you lose 18% on the algorithm. Your average win is 4%. Just doesn't have the volatility that I like to trade. But I don't know anything about the company long term. I do see 60 cents here. You go from $1.25 down to 60 cents. So not a huge dividend either. Again, I'd probably be in oil, to be honest with you. I just don't know what they do. Scans, Snowflake. We talked about Snowflake. I think it's at least a $200 stock here at 180. You're getting the secondary up cross. The original one was 178. You're at 183. My average price, I think I bought more at about 150, but I think my main average price is still around 170. I'm in this for the long haul. This is kind of like Palantir. They're just an AI company. Microsoft, another cross up on Microsoft. We talk about confirmation. Look at the confirmation on this one. I mean, you lost it here. Could have gotten out, but yeah, I mean, you're just at all-time highs on this one. And it's not going anywhere. Again, the AI train is strong. Your first resistance is going to be around 360. But I don't see anything moving it from there. IGM, this is the ETF that I talked about that I actually like. IGM had a cross up again. It's just kind of capitulating here on the MACD. So it's going up, it's going down. We had NVIDIA, another cross up. NVIDIA was up yesterday. It's pulling back today, but you still have confirmation. If you want to buy it at 424, have at it. I think you'll be able to get it under 400, but if you want to start your position at 424, I don't think you're going to regret it. SRTY. This one is up 0.02. This is a short, ultra short of the Russell 2000. It has a cross up here at 41.56. Remember, this would mean that IWM, which is the Russell 2000, would go down. This will go up when the Russell 2000 goes down. So it's a triple levered short, SRTY. XLC, we talked about this great move in the communication sector. It's moving up again. It's got that cross up. It's a secondary cross up. Mara has a cross up. We talked about this one. I do think that this is a $10 stock. $9.81 was the buy-in. You're at $9.32. You're down 3% today. I think anything under 10, you can buy it and sell it. KHC, Kraft Heinz. I own this in my Webull account. I will make a pledge. I'm going to start using that Webull account and trading in that Webull account. It's a tiny account. It's $1,000. In fact, I'll tell you exactly the status of it today. Webull account is at 1142. I put $1,000 in there, so I'm up 14.2%. I am underperforming. If I would have just bought the Qs, I'd be up like 40%. I'd be at like $1,400. But I didn't buy the Qs. I have Caterpillar, I have Boeing, I have Apple, I have Procter & Gamble, I have Kraft Heinz, and I have Gap. Those are the stocks that I have in there. I've been trading SQQQ. I've been trading TQQQ. I haven't done well on either one of those. I think I'm about even, maybe down a little bit. But I'm down 7% on CAT. CAT, I'm down 7%. Apple, I'm up 30%. So yeah, Apple's driving my up on that one. But yeah, I own KHC. It's under the 200 day, 36.67. You can see it on the screen. I think you move up. You had this death cross here. If you get this button hook, if you want to wait for confirmation, you can wait for a couple of candles. Maybe wait until you get to 37. And when you get to 37, you can trade it. Because you know what? That 200 days right at about 39. You only need 40 to really get close to 10%. And it's a decent company. I mean, Kraft Heinz, KHC, when you look at it, the 52-week range, you're right in the middle of the 52-week range. The high is 42.80. The average target price is 45.25. You're trading at 36.90. 4% dividend while you wait. It's down 10% year to date. It's a good company. April 23rd, Stifle, buy with a $44 price target. That's the last cover. Let's see. The insiders are selling at around $40. They're selling around $40. So I think that's where you manage it. And so 36, I don't think you're bad off at 36. And you get a 4% dividend while you wait. ATVI, we talked about this one. The Justice Department, whoever is going to fight it here in this country. England, they've already said they're not allowing it. It's covering this gap. Does it get up here to 85? Is it worth your money at 85? Well, if you think that the sale's going to go through, it's $95. If the sale doesn't go through, Microsoft plays Activision Blizzard $3 billion, which is basically a rounding error for them. So I don't know that you want to buy it at 80. It's the 70s. It was a pretty compelling story. Electronic Arts has a cross up here. I think this is too high, 127. You're going to cover this gap. You've already covered it to 128, 129. If you look at a long term of this one, Electronic Arts, I think it's just, you're right around that 200 day. I think this was the craze of the pandemic where everybody was buying video games and playing video games. I still think EA is the greatest video game. I mean, listen, I'm buying Madden every year. I'm buying NHL every year. I'm buying FIFA every year. So, yeah. Okay, that's the podcast. If you're interested, newsletter, dailystockpick.substack.com. TrendSpider, there's a link down below. Will save you 25%. I said by mistake yesterday that it was $400 a month. It's $400 for a year. So if you're trading $5,000, if you're trading $10,000, it's worth it. For me, it takes emotion out of the trade. I can look at this 4-hour algorithm, and you know what? What I do for you when you do sign up, I not only get you 25% off, I give you my algorithm, the 4-hour algorithm, the 65-minute algorithm. I give you my watch lists, which basically you can just look at and say, okay, Gary said that PXD under 200 is good. Should I buy it at 202? Yeah, you should buy it at 202. But hey, sign up if you'd like. Sometimes there's 50% off sale. So if an extra $20 or $30 makes a difference to you, wait for that kind of sale. But if you do want, we talk about Tesla. When's the best time to buy Tesla? When's the best time to sign up for TrendSpider? It's today. You get 25% off. Take emotion out of your trade. That's essentially what I do. I get texts. Like I'll set a MACD cross up for Apple and Microsoft or Google or any of that stuff and say, okay, this is a good entry point. If I'm out hiking, just get on my mobile phone and I buy it at that price. I put in a limit order at that price on my mobile app on Fidelity. That's it. It's a great service. If you are paying more than $25 for your phone service, there's a link down below for Visible. This is the service that I personally use. It is fantastic. It is unbelievable. I listen to podcasts. I watch YouTube videos. I don't get limited. I mean, honest to God, maybe some people, like I think I was comparing with T-Mobile. Remember, I'm on the $25 plan. The $35 plan on Visible gets you the ultra speed. You're only rate limited after you use 50 gigs of service. Who's using 50 gigs of service? If you are, you're part of the problem, not part of the solution. Cut back. Enjoy life. I mean, 50 gigs of mobile data? What the hell are you downloading? But yeah, I was comparing T-Mobile, and she was getting, I think, 100 megs per, maybe it was up to like 400 megs. It was the Ultra 5G that you get on the higher rate tier plan. But T-Mobile's $45. You know what Visible is? It's $35. So $10 a month, $120 a year in your pocket versus in the pocket of the cell phone providers. Cell phone, it's a race to the bottom. The price will continue to move down. So if you have any thoughts, any questions, join the link tree down below. Has all the links. Again, if you made money, tip your bartender. That's all I ask. Rate the podcast. Do something for me. And shout it out in the private Facebook groups. Just say, hey, Gary, I did this. I'll give you a high five. If you don't want to give me a tip, just do something. Subscribe to the newsletter. Subscribe on YouTube. Do something. But if you made it this far, you like me. Come on, be honest, you like me. It's nice. Okay, 48 minutes today. I will talk to you guys tomorrow. I may have something special tomorrow. May have a nice monthly recap, even though it's the middle of the month. I think I want to recap kind of what we've done this month because we've had a really good month. If you've listened to me and you've traded, my trading, I'm doing well. I don't, tell you guys exactly what I do because I don't want anyone following me. I just don't. You guys make up your own decision. I give you all the plays that I do. And I will tell you, most of the big plays I have not been in. So, that's why I don't tell you what I do. But, okay, take care. Have fun. See ya.